War continues to rage on in Ukraine. US dollar is hitting all-time highs for the year. Bitcoin is nearing 100,000 and gold is bouncing aggressively. I think a lot of this has something to do with each other. And we're going to talk about all of that and more. My name is Blake Morrow of Forex Analytics, and you're listening to the Week Ahead video. And this is the Week Ahead video for Thanksgiving week. So I just want to say welcome here. If this is your first time, make sure you stick around. We're going to talk about a lot of different markets, not only the dollar, the Bitcoin, the S&P, and a lot of different currency pairs and what's moving it all, but we're going to talk about all the events that are happening this next week. It is Thanksgiving week in the US, so if you live in the United States, happy holidays. If you don't, enjoy a couple of hopefully peaceful days. So we're going to go through all of that and more, and I'd like to start off with talking a little bit about the sentiment that is really extreme in the markets. And I'm going to actually, take you over to some really key charts that I think are pretty critical here. And we're gonna first of all talk a little bit of what has happened just over the course of the last couple of days. And really over the course of the last, this is at the end of the week. This is Friday, by the way. If you don't know, when I film, I typically film on a Friday, and you can see that we just came off of a very weak European PMIs, UK PMIs, and then also US PMIs came in better than expected. So this chart that you're seeing here this is the 2-year differentials between the US and the Eurozone. And what you see is a big breakdown. Now, if you look at the euro dollar chart, which is in red, you'll see that the euro is actually breaking down through some really key support. And I'm gonna draw that green line for you right here, and you can see we are actually breaking through support on a critical support on a daily basis. So based on what I'm showing you right now with these two particular charts, you'll see that they match up very, very closely. So if you see this breakdown in this differential between yields, that's telling you that the euro should be, or at least trend in that general direction lower. This is a chart that not only my colleagues at Forex Analytics use, but also one of my colleagues at Pepperstone, Chris Weston, he uses using a 1 year over 1 year chart. But I wanted to show you why we're trending lower. And then if you add on top of it the geopolitical risks with what's happening in Ukraine and Russia, that's obviously giving the dollar some buying pressure too. And then on top of that, we also have sentiment. Now, I want to talk a little bit about sentiment because I think this is important as we go into the markets. If you look at, and this is the Forex Analytics chat room, by the way, one of the best places to be to just have conversations with, myself. If you want to talk about me and some, how I'm trading the markets and how I'm trading the loonie, for example, or how other traders are talking and squaring up with positions. We have our trades room where you can see what we're doing with positions that we're in, who's buying, who's selling, what they're closing. But I want to take you over to the news and research room and take you over to the daily sentiment index, which is a paid index. But what you're going to notice here is the euro is at an extreme 10, which means that there are very little buyers. Out of a scale from 100, 0 to 100, when you get to 10 and below, that is extreme bearish sentiment, which usually means that we could be at risk of a pullback. But I've seen extreme sentiments be extreme for quite some time. But here's another sentiment reading, and this is from my FX book, and this shows you retail sentiment. Now, retail, as I just showed you over the euro. I'm going to take you back over here. I'm going to take you over to the euro dollar itself, and you're going to see that bearish breakdown. This is the lows of the year. These are lows we have not seen since 2022. Right now, out of all the traders that are trading the euro dollar, 84% of them are buying. That means they're buying when the market is collapsing. Now, typically when that happens, when retail is doing that, that means there's usually further to go because this has to balance out a little bit more. You have to get a lot of these people that are long, they finally throw their hands up and they say, I'm getting out. You saw that happen with the dollar Canadian a week or two ago, which we're going to talk about, here in just a little bit. So can the euro dollar continue lower? Yeah, especially with the weekend risks, with positioning, with sentiment. But I think we're getting to levels that are going to be very important for a potential reversal. But as of right now, with economic data continuing to weaken in the Eurozone and strength in the U.S. economy, and probably sentiment to stay very similar until the new President-elect Trump takes office, that might be fairly persistent. So just keep that in mind. Now, obviously, when you're talking about the geopolitical risks, yes, Russia, Ukraine, what's happening there, it's obviously intensifying. And let's hope and let's pray that nothing bad happens in the coming weeks ahead. Hopefully by the holidays. But we are really one slip up away from a disaster when countries are sending missiles cross borders. So it's obviously traders are looking to be defensive by buying dollars, buying gold, and maybe even buying some Bitcoin, which we're going to talk about those charts in a few minutes. Now, at this point, I'm going to talk about all the events that are happening this next week. We're just going to use some of these charts right over here, and then I'm going to get into the down and dirty technicals. Now, remember, this week ahead video, it should be chaptered after watching it. If you watch it a day or half a day after it's been released. So you can skip across the bottom if you're watching on YouTube and you're watching this on a YouTube player. You should be able to skip through the channels. If you're watching via Twitter or Facebook or something like that, you might not be able to have that functionality because it's a fairly long video. So I'm going to cover what are the events that are happening next week. You can follow along right over here in your Forex Analytics platform. I'm going to go ahead and run through some of those key events going into next week. So next week, to kick us off, we have New Zealand retail sales. Now I'm going to show you the Kiwi dollar, and I think this is a really important chart for us to look at. Let me just pull up the Kiwi. I don't know where I have it stashed at, so I will find it for you. Give me 1 second. I don't know what my problem is here that I can't find it. It is somewhere. I just must keep. Oh, there it is. I just keep skipping past it. There it is. Sorry about that. So you got the Kiwi. What we're doing is we're probing a really, really critical level of support. These are levels that we haven't seen since October of 2023. But you can see this really big horizontal support that we just broke. And the risk to the Kiwi is we have some data coming out next week, like the New Zealand retail sales that's going to come out on Sunday. So obviously we're closing in on some really, really critical support right over here. We have German IFO. Now, obviously, this is more German business sentiment, but if you just saw the Eurozone PMI data, you understand why watching the German IFO and understanding that German's economy is really quite weak right now. You can understand why that is in focus at the moment. So keep your eye on that German data coming in. Now, on Tuesday, we have consumer confidence in the U.S., Richmond Fed, new home sales. And we're obviously going to be focusing a lot on the dollar, but I'm going to really focus a lot on the U.S. dollar, Japanese yen this week, which we will discuss here in just a few minutes. I'll dig into the charts here. On Tuesday, we have Australian CPI. Now, this is one I'm gonna actually spend a little bit of time talking about the Aussie New Zealand right now, and I wanted to pause specifically for this particular part of this show, and I want to talk to you guys about the Aussie Kiwi, because not only do we have Australian inflation data, but 30 minutes later we have the RBNZ. So as far as inflation goes, if you've been looking at inflation data as of late, what you've noticed is inflation has been percolating globally. Not sure if it's going to make its way over to Australia, but with the RBA has been very, very staunch in keeping rates unchanged, where you have the RBNZ. 30 minutes later, they're going to make the rate decision. They are expected to cut rates by 50 basis points. So there's just what I said right there gives you a really good understanding of why the Australian New Zealand has broken a major resistance level to the upside. However, I do believe that this currency pair is going to be really in play this next week, because if the Australian CPI continues to be really strong and the RBNZ does cut rates and they remain dovish, there is a very good likelihood at this point in time, you're going to see a continued rally in the Aussie New Zealand to the upside. Now, the flip side to that is, how about if Australian CPI comes in maybe not as hot as everybody thought? Because remember, Australia and New Zealand are over by Asia, and what we've seen with China, with the Chinese economy, is very slow. So maybe inflation is just not so hot over in China. If that truly is in that part of the world, if that truly is the case, and Australia misses the CPI data, comes in below expectations, and maybe the RBNZ cuts rates and is just more hawkish, saying that, because of inflation pressures, maybe they're not going to cut any longer, you could actually end up seeing a reversal in the Aussie Kiwi. So what I'm trying to point out here is, I believe this 111.60 level, I just put the same line on there that I already had. This is going to be very critical resistance going into next week. I wanted to spend a little bit of time talking about the Aussie New Zealand, because I do think it will be a very pivotal level next week for this particular pair. All right, continuing on with what we were discussing. That happens on Tuesday night. Wednesday, we have Norway employment. And by the way, on Wednesday, we are going to have a data dump in the U.S. We have U.S. preliminary GDP, unemployment claims, durable goods, PCE, and then pending home sales. So a truckload of data will be released. And when you're looking at the U.S. dollar, Japanese yen, we're probably all going to be looking at the same triangle that looks something like this. So just keep in mind that that data on Wednesday in the U.S. just before the Thanksgiving holiday could really allow for a big move, especially if that data in net comes in better than expected or worse than expected. All right, so that'll be on Wednesday. Like I said, Thursday is the U.S. Thanksgiving holiday. U.S. markets will be closed. A lot of traders are going to be out of here. Liquidity is going to be a little poorer on Thursday and Friday. All right, keep that in mind while you're trading. Also, if you look around on Thursday, we're going to have Eurozone CPI. I'm definitely going to talk about the euro in a few minutes. And then on Friday, we have Swiss GDP, Canadian GDP, Euro CPI, and that should wrap up the week. So what I'd like to do at this stage is I'd like to go into some of these major currencies, because I think they're really key. So let's go into the euro. And first and foremost, you got the euro dollar that is in process of completing what I would call a bear flag pattern. If you don't know what that bear flag pattern looks like, let's draw it out for you. So, and obviously, if you're on Forex Analytics and you just look at, the euro dollar and you go over to the basic technical analysis, you'll see exactly what the bear flag looks like. It's something that we've been guiding you lower in the euro dollar for literally for the last several weeks, with multiple patterns in play on the euro dollar and so on and so forth. So you can actually get that same analysis on Forex Analytics. I'm just, for those of you that are not subscribers of Forex Analytics, I'm drawing the chart out for you. So with the euro, what you're going to see here, this is our bear flag pattern, right? Looks just like this. Now the bear flag pattern to complete would take us all the way down to the 102 level, if it completes as a whole. Now, you might be looking at it like that. You might be looking at a little bit shorter term. Regardless, it's taking us, it's still, whoops, I'm sorry, that is not correct. There we go. It's 202.80, 202.90, somewhere around there, just below, I keep saying 202, 102. It's been a long day already. It's been a long week. Basically just below 103. That's where the flag pattern should complete. If you draw it. Now, you can see it also is not too far away from the 127% extension of this entire range. And I'm going to do this really quick. I'm going to make it an extension so you can see it in its full glory. That comes in around the 102 level. That's, longer term, that would be a target. Now, one of the things that I would be keeping an eye on next week is, as long as we stay below 105, the euro remains bearish. Let's not forget that we are closing in bearish territory for the euro, more than likely for the week. We are at fresh lows for the year, and there's momentum beyond that. But I do want to reiterate the idea that sentiment is getting rather extreme, okay? And I still feel that there might be a washout of retail traders, because remember, there's 85% of retail traders on my FX book, which is a pretty big sampling, are long. They keep buying as it's dropping. And so, the market likes to punish retail. So there's that. All right, so there's your euro dollar analysis. Just while it's below 105, I think you remain bearish. Sterling has broken a really key trend line. And now, while you're below the 126 level, so let me grab this zone here and just say, while you're below that 126 level previous support, that should act as current resistance on the way up. And so should the trend line. So if you get a bounce here, selling into resistance around the 126 level is probably what traders are looking to do, or traders that are long are looking to get out. You look at the Aussie. The Aussie is acting very, very well. I think a lot of that is cross rate action from the Aussie Kiwi. That's keeping the Aussie very well supported. Also, remember, there's been a lot of stimulus in China. So the level that I'd be really concerned with is if we started breaking back below like this trend line, which comes in around 64 cents. We're still far away from there, and we're acting, like I said, we're acting not so bad in the Australian dollar. Now, and I think a lot of that has to do with risk appetite, meaning stocks are not very far from all-time highs. While they are near all-time highs, traders are going to be buying Australian dollars. If risk turns the other direction, that means stocks start coming down. The Aussie dollar may come under pressure. And that's when I think the Aussie is at a much bigger risk. So, are we there yet? No. We'll take a look at the S&Ps in just a few minutes, so don't worry about that. A couple other charts I did want to discuss is, like I pointed out earlier, the Kiwi. We are once again at very, very critical support, and we're going to close below lows. So now we have to be very focused. Let's go out to a daily chart here. We have to be very focused on this low. And I know I mentioned this to you guys last week. That's why I'm just revisiting it. This low right here, once you start getting below there, I mean, you can see where it starts opening up some major, it's like a trap door, if you will, below the market. So we're not quite there yet, but this is going to be a fairly bearish close for the week for the Kiwi. We have talked a lot about the Canadian, and I'm actually going to talk about this chart when we come back, when we review the trade setups from this last week, and we talk about the trade setups for this following week. So I'll talk about that in a few minutes. I'll come back to the dollar CAD. So don't go anywhere. All right. One last currency pair I'd like to just discuss is the U.S. dollar Japanese yen, because the U.S. dollar Japanese yen is on the verge of moving. Now I'm going to talk about this a little bit more extensively in a few minutes. But I do want to point out that I think we're consolidating. And by the way, if you don't read our blog, you can go to our website, go to the blog, and get the chart of the day from Steve Vulgaris. And he talks about the caution that should be warranted with the U.S. dollar Japanese yen at this moment in time. And he explains it in much greater detail. Okay, so make sure. By the way, if you don't, let me stop here before we start moving into some of these other major currency pairs. If you don't use the Forex Analytics platform, this is what the platform looks like. You have analysis of 30 different instruments, right? Not just currencies. You've got crude oil here. You've got the dollar index. Of course, I just mentioned currencies, S&P. You got boons. You got Bitcoin, Ethereum, which is going to come into play this week. So stand by for that. And a lot of different cross rates. You have Live Squawk. You have a risk management tool that I use all the time, as I use this risk management calculator all the time. It's like one of my most frequent tools over here to the right-hand side next to the Live Squawk feed. You have patterns in play, and then you have the chat room, right, where you can access you can access me and other traders throughout the course of the week right here in the chat room. So make sure you can see how busy things are just on a Friday. This is us Friday during European hours, talking about the markets, talking about the breakdowns in the euro, and different traders mentioning what they see. So make sure you jump in our community, because it's only $1 for 10 days to try it out. $1 for 10 days. Try it out and take advantage of Forex Analytics, and come in the chat room with me. Okay, let's get back to what I wanted to mention, though, is if you're in the Forex Analytics community, you're very familiar with some of the other asset classes that we cover, and I wanted to cover those as we go into the remainder of this video, because I think it's very important that we talk about what's happening in the gold market, what's happening in Bitcoin. And so let's get started with, let's talk about gold, because last week we talked about gold being at channel support, and guess what? We bounced aggressively from channel support. That is the channel support we drew from last week, and we bounced, and we've bounced like a bat out of hell. So now the question is going to be, can we hit new highs, or are we going to stop short of hitting new highs? And I think that has more to do with what's happening in Russia and Ukraine, to be frank. Because if you look at how silver is underperforming gold, you can see how silver is underperforming gold. That is just purely a risk aversion trade. If Russia decides that they want to actually launch a nuclear weapon into Kiev or somewhere around, and maybe if it's even a small nuke, just to show how serious that Russia is, gold will be trading at 3,000. But if we can manage not to have any more escalation in Europe between now and the holidays, there's a good chance that gold's not going to make new highs. So, I can tell you technically where, resistance is, which is at the channel top, and where support is, which is at the channel bottom. Whether we make it there or not to either level has more to do with circumstances out of my control and your control as well. So just think about that. Okay, so there's gold. Let's talk about copper, because we talked about copper being on a really critical level of support. And guess what? It continues to hold that support. Now, you notice where the spike lows are? That means we should actually take this low and draw it across these lows. That is your support. If copper really starts to break this $4 level in copper, it's going to be ugly, but it still continues to hold support very well. We also have discussed crude oil and how important this range is. And guess what? This range still remains very important to the market. You notice how we've been respecting the bottom end of the range. The upper end of the range comes in around 73. Whether we break out or we break down has more to do with the economy and risks, geopolitical risks that are surrounding us. Again, situation outside of our control, but we know where the break points are. And as a trader, that's what you want to know. Below 66.50, above $73. Those are your breakdown points. Pretty simple, right? Okay, so let's continue on. We talked a lot about the bond market, and we just talked about how important this trendline support is. It continues to be really big support. But And I know I talked about European yields, but let's keep an eye on U.S. yields. They are consolidating here, which is just the inverse of the 10-year, the ZNs that you see here. If we start breaking down in the 10-year notes market, that means that the 10-year yield is actually breaking out to the upside. That is going to give the dollar further reasons to rally. Whether you're talking about the dollar yen, whether you're talking about the euro, whatever you're looking at, that is going to fuel that process. All right, now usually at this time, I'll bring in Nick from Trading Analytics. Unfortunately, Nick just had knee surgery. He had knee surgery, and so he's probably not going to be back for the next couple of weeks. Speaking of which, I'm glad we're here, and I'm glad we get to talk about this, just to make sure I mention it to you. Next week, I will not be filming the week ahead video. Because it's the Thanksgiving holiday, and I will not be able to do so. But don't you worry, because one of our team members, I just scrolled past him, Greg Horvat, will be filming next week's week ahead videos. So make sure you give him a warm welcome. He's our Elliotician, I like to call him, in Forex Analytics. So he puts out all the Elliott wave charts that you see here that are updated every day on all 30 instruments. He's going to be giving you an update from Slovenia next Thursday. So make sure you give him a very warm welcome. And let's see, does he think the euro is going to continue lower? He does. He does think we're going to be finding wave C bottom somewhere around here where we're at right now. So interesting to hear his views going into next week. All right, so Nick will not also be updating, but don't you worry. He'll be back. He had knee surgery, so he'll be back after the holidays, and I'll be back after next week too. All right, so here's the S&P. The S&P continues to make higher highs and higher lows. Are we in an ascending wedge? Maybe. Are we just, grinding higher into new highs? Yes. Do we continue to climb the wall of worry? Yes. Is it tough to short S&Ps? Yes. Matter of fact, that was one of our trade setups next week that didn't work. But the S&P is, coming into some major resistance. And I'm going to show you how big of resistance this is. Because if you take this high right here to this low right there, and this is the summer's move, the 161% extension also is right at the all-time highs or near the all-time highs. It just comes in around 60.55. So chances are we're going to make a new high, and if we make a new high, you notice how relative strength is divergent. It's divergent. So if we make a new high in price and we reverse, chances are relative strength will make a new high and reverse as well. So what am I trying to say is any new high in the S&P, be careful of some sellers stepping in. All right. At this stage of the show, I want to talk about the three setups from last week, but I also want to talk about the three trade setups for this next week. Now, remember, it is a holiday week, so we're going to cover all of the ones that I talked about last week. And also, if you're liking this video and you think it's crucial helping you get prepared for the next week, make sure you give me a thumbs up. Jump down in the comments below if I missed something that you think is going to be really important, or if you don't agree with something that I'm talking about, jump down in the comments below and let me know. And also thank our team for getting this video out to you so you have the opportunity to be prepared each and every week. Thank them, because without them, it doesn't happen. I can be replaced by Grega next week, but the rest of our team, irreplaceable. So make sure you give them a big thumbs up. All right, let's talk about what's happening this next week, or about the trade setups. So first trade setup, dollar Canadian, we were looking for a dip back to 140. Well, we got a dip back to 140. We were looking for a dip to be long. We got to 140. And matter of fact, if you did buy it at 140, you bought it at 140, you might have taken a little bit of heat. Maybe you got out. Maybe you bought it again. Got out. I've been trading around the dollar Canadian, and I actually own some dollar Canadian lower than where we're at right at this moment in time. So did the trade work out? Probably not. You might have gotten chopped up. So I'm just going to say it didn't work because it was above 140. And I was like, wait for a dip to 140. We got there and then some. And currently we're trading below 140. So we might be above 140 by the time the market closes on Friday. You never know. But we're going to count it as a no-go. But you can see how important, I just want to point out how important this support is for the dollar CAD. And I wouldn't be bearish yet. Now, if we start breaking below this week's low, I think it would turn bearish. But at this point in time, it's holding up, but it's kind of like the Aussie. It's holding up, but barely. The Aussie is doing really well. And I think these commodity currencies are just outperforming because stocks continue to outperform. But yeah, a break below, 139.30, it's probably going to be a bearish event. So just keep that in mind as we go into next week. All right, setup number 2. From last week. Okay, short euro yen at 163.20. So if you shorted the euro yen at 163.20, let's see, Friday we're here. Yeah, Friday we're here, and I'm like, oh, get above 163. Short euro yen at 163.20, right here. No, right here at 63.20. Yeah, you may have had to sit through some heat, a lot of volatility this week, but overall we are lower this week quite substantially. So, is that a good trade setup? Yep, trade setup number 2 worked all right. Trade setup number 3. Sell S&P rallies above 5,900. Well, now the euro hit 5,900, and we've just been grinding higher. Once we were down here on Friday, I was looking for a sell above here. Yeah, we've kind of been on both sides. You might have made money in the first time around. You know, we rallied above 5,900. We dropped all the way to 5,830. You might have taken off 50 pips out of the S&P, which is a good chunk of change. But between now and Friday, it hasn't worked. I mean, it's continued to fight gravity. So 2 trades didn't work. 1 did. Again, depending on how you traded them, you know, you could have done a lot better than that ratio. That's for sure. All right. So now I'm going to give you the 3 setups from next week for this next week. But before I do that, I just want to tell you guys this. If you guys haven't taken advantage of the trader funding program, it's been very popular the last couple of months because volatility has picked up. And so if you want to learn how to access larger amounts of capital and you don't have access to $25,000 or $50,000 or $250,000 or $1 million trading account, check out the trader funding program because you also get Forex Analytics included with this. It's a one-step process. We don't do complicated, programs. You got to jump through one hoop, jump through the next hoop. No, you got to make 10% without losing more than 6% on a trailing basis. That means trailing to your high water mark. That means as you're making money, you can't lose more than 6%. If you think you can make 10% and not lose more than 6% with unlimited time, yeah, it's simple. Then this program might be for you. And if you're new to the trader funding program, that means you've never done this before. You get a one-on-one consultation with me. I'll spend 45 minutes with you, taking you through the different tools that you have available to you. We'll talk about some of the strategies on how I've passed assessments, and hopefully it'll help you get over that hump so you can access larger amounts of capital. And you get to keep up to 90% of what you make. Your risk, not risking your own money when you're trading those live accounts. Your only risk is your assessment fee. So take a look at the trader funding program. You should. All right. Now let's talk about what is my top trades of this next week. It's a Thanksgiving week. So remember, it's going to be a little bit higher volatility, less liquidity. Keep that in mind. First one, dollar yen. I want to short above 157. Matter of fact, closer to 157.20. Why? Because the dollar yen is in a triangle pattern. I think we can make one more move up to the 78% retracement, and then I'm looking for a short. So I'm looking for a short somewhere from this level. If we can make one more stab higher, why and how could that happen? Well, that could happen as long as yields continue to go up. So if you see yields go higher, the dollar could respond by going higher, and hopefully we see 157 for a potential short opportunity. Trade setup number 2, Bitcoin peaks. If Bitcoin peaks above 100,000. Now, you knew I was going to talk about Bitcoin. I had to, right? If you guys haven't seen Bitcoin in my, what I think is a target, that means you haven't been listening. We've been looking for 103,000 for quite some time, for weeks and weeks and weeks and weeks, and we're almost there. The peak comes in at 103,000, or the cup and handle pattern, which also happens to coincide with 161% extension of the entire damn cup. So if Bitcoin reaches 100,000 or 103,000, it looks like it has peaked. I am then not looking to short Bitcoin. But instead, I'm looking to short Ethereum below 3,000 with a double top. You know, when Bitcoin is rallying and people can't afford to buy Bitcoin, they're like, oh, I'm just going to get a bigger bang for my buck. I know some of you might have done that already. So what do you do instead? Well, you buy some altcoins. You buy Ethereum, you buy Solana, whatever you're buying, whatever altcoin you're buying. Well, if Bitcoin peaks, there's a good chance that Ethereum is going to peak and roll over. So if we break below 3,000, I think you have a double top in play. Okay, so that's trade setup number 2 for you crypto people. Trade setup number 3 is going to be the Kiwi yen. Now, the thing about the Kiwi yen is you can see we are in a range. And let me go ahead and draw it out for you. So the 200 DMA is capping us and support is 90. So you notice we're at 90.27 right now. A daily close below 90 yen, I am looking for a range extension short, which will take us, back down to, 87 or something like that. So I'm looking for a daily close below 90 to be short New Zealand yen. And guys and gals, those are your 3 trade setups of this week. So if you like those, tell me down below. And if you approve of them, tell me down below. You know what's free for you today? Free for you are comments, giving me a thumbs up. Subscribing to our channel doesn't cost anything. So this way you always have access to these videos as soon as they come out. You'll be notified on your mobile app or on your desktop if you're looking at your computer. And those are free things that you can do to really support our community. If you want to support the Forex Analytics community, like this video, subscribe to our channel, and comment down below. And let me know your thoughts. And I want to thank you for spending your time with me. For those of you in the United States, happy Thanksgiving to you. I hope you have a wonderful time with your family and friends. Those are the times that we cherish. Those are the times that we live for. So be thankful. And for those of you that are not celebrating the Thanksgiving holiday, I hope you just enjoy a peaceful day. And let's all hope we have some peace in the world for sure. So guys and gals, thanks for spending your time with me. I do appreciate it. My name is Blake Morrow with Forex Analytics. I look forward to chatting with you in the Forex Analytics community. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.